Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. I'm looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And last time we spoke, guys, Bitcoin was sitting just below here at approximately, well, I'll just go ahead and bring up my last update. Bitcoin was sitting right under here, right below our 350 or 5350 resistance that we had talked about so many times, guys. And if you remember my last update, guys, I told you that we were watching longs and shorts. I told you, I'll just read it right here. Shorts remain stacked, longs are flat. Should a short squeeze occur, I can see price hitting 5,800, at least 5,800. Shortly after that, we did have that short squeeze, guys. Price pushed up, trying to liquidate, market makers trying to liquidate those short positions. And where did they find the resistance? Right there, almost to the dollar at 5,800. Our high was 57.96. So it doesn't get much closer than that. That was very close. That was also, not only did we have a clear resistance at between 5,800 and 6,000 that I've had marked off here for quite some time, but we also had what was this ascending broadening wedge that I had talked about, guys, that I do believe that we are in now. And we've had at least 3 touches to either side. An ascending broadening wedge is usually identified by 3 touches to the top, 3 touches to the bottom, and then you can have multiple touches. You can have 4 or 5 touches to the top and or bottom, but you want to have at least 3. We've had that now, and now it's a matter of which direction this is going to break, guys. And in my opinion, I think overall, even though we may have another kick up here in the short term, I think overall this thing is going to end up breaking to the downside. I think we're long overdue for a correction. Now, does that mean I'm bearish on Bitcoin? Not at all. I think overall we're looking at a very, very bullish looking market so far. I think all signs right now are showing a lot of strength, but we have not yet seen that larger correction that we're going to need to see, or that we're very likely going to see, and that we've seen every single other time we've had a golden cross. So looking at here, and I'll get to that in just a second here, guys. But looking at this, guys, if I pull out here to the weekly chart, in fact, I'm just going to go ahead and bring up Bitstamp because it's a little bit easier to look at, and it's got a lot more history. If I bring up the weekly chart here on Bitstamp, guys, what do you see? What becomes very obvious? You don't need to be an experienced trader to see this, guys. You can see this is just clear resistance. We're obviously approaching a very, very strong area of resistance right here. And this is the area that's really got to get decisively broken above if we are in fact going to transition into the bull market that everybody hopes we are. And right now we are not in there yet. And if you think that this is just going to break through 6,000 like butter, I mean, you got another thing coming. There's a lot of resistance here. Now, of course, anything could happen. This is crypto, guys. Anything could happen in this market. I don't want to sit here and tell you that it's not going to happen as soon as I say that. Of course, it does happen. If you've been in this market for any period of time, you know, the only thing that is expected is you're expecting the unexpected. That's almost, I mean, that's truly, if you've been in this market any amount of time, very few things surprise you. That being said, guys, it is very, very clear that getting above this resistance, is this $6,000 resistance, is going to be very difficult, and I seriously doubt it's going to happen on the first shot. So watching this area that we're watching here right around 6,000 as we get up near it, guys, knowing that we've seen this very bullish looking weekly chart that is yet to have a strong pullback yet, I absolutely think that we are more than due for a pullback. And logic would tell me, if I just look at this overall structure, guys, and I just pull swing low to our current swing high, pardon me, logic would tell me that you can see it. There's the major area of resistance that we finally broke above, that we have our major bullish engulfing candle right here, was of course that breakout above that between 4,000 and 4,120. And logic tells you guys that that would be an area that very likely we're going to come down to. Now, the most bullish scenario, we come down here to right around 4,900, the bottom of this order structure right here, and bounce off that. Is that possible? Yes. Is it probable? I don't think so. I think a more likely scenario is we may have topped out, we may come back up and hit 6,000, maybe even wick above 6,000, but I'm expecting a strong rejection there, and I would expect, I think smart money is going to come down here to approximately the 618 fib, which is also just so happens, coincidentally or not so coincidentally, coincides almost perfectly with the area, with that prior area of resistance, which now should act as support. Remember, what was support often acts as resistance. What was resistance often acts as support, especially when you have such a strong area of resistance as this was, especially when you have such a strong area of support as 6,000 was. So we can, logic tells us 6,000 should get a very strong rejection. There should be a lot of sell orders sitting here, a lot of shorts waiting to go in right around 6,000. And of course, I expect there to be a lot of buy orders right there at that 4,000 to 4,120. And I would expect at least a decent temporary bounce Now I know, is there a chance for us to go sub 4,000? Absolutely, there's a chance of that, but I do believe even if that is to happen, you've got a very good trading opportunity for a nice bounce off 4,000, and I would expect it to bounce from 4,000 up to at least 4,500 before it possibly continues down. Do I think it's going to continue down? Honestly, I'm leaning more bullish at this time, guys. I can certainly make a case for going below that, guys, and I'm not going to tell you it won't break 4,000. Personally, though, I'm leaning more bullish. I know some others are leaning bearish. And really, you're not going to hang your hat one way or another. As a trader, though, just purely putting my trading hat on, purely looking for a money-making opportunity. If and when Bitcoin hits that $4,000 to $4,120 range, that's an absolute buy, in my opinion, for a very quick scalp and or swing trade, targeting approximately 4,500, or even if you want to get risky, 4,900, the top of this prior zone, before the bears would say it would continue down, before the bulls would say it would continue up. Either way, you've got a money-making opportunity right there at 4,000 to 4,120 if we ever do see that. Now, looking at this structure, guys, especially zooming in, I mean, we should have had a pullback long before we have now. You could say that's just the bulls returning and, we're off to the races. Yeah, I guess that's a possibility. Or you could say this looks an awful lot like manipulation. Now, given the fact that we had that news off of Tether the other day, and as soon as we got that news, I'm going to pull back in here to the daily and bring up Coinbase again. Just a little bit more comfortable. As soon as we had that news with Tether, that Bitfinex news with Tether coming in, what did we have? We had that strong rejection right here at the top of this zone. So yeah, knowing that this is going to break down, guys, I've never seen shorts as stubborn as they are right now. This is looking at our short positions, guys. Shorts have been extremely stacked here, and they were. All the way through that Tether got that announcement, and what happened? Shorts just continued to climb up here, guys. So yeah, is there insider trading going on? Absolutely, without question, in my opinion, there was. We're seeing shorts continue to the upside, guys, without a major correction. I've never seen shorts this stacked like this without a major correction. I can't say never. We haven't seen shorts this stacked. The last time we did without a major correction was when the market was dumping right at the end of 2017, the December of 2017, guys. That's the last time we've seen short stack this high, again, without a major correction. We've had a little bit of a correction here, guys, but not nearly the amount that I would have expected for coming up and testing 5,800. So we're really in kind of a predicament. The market should have corrected itself. A healthy market should have corrected itself a long time ago, a little bit deeper than it has, and then we'd continue up. We haven't seen that. I think more than likely, guys, we're getting, again, a lot of manipulation. These shorts are extremely stubborn. I mean, you can see they've only corrected with price bouncing up almost from 50, call it 5,400, I'll be generous. 5,400 all the way to 5,800, a $400 rise. What did shorts get liquidated by? 5-6%. That's nothing. That's absolutely nothing. I would expect it a lot more than that. So this is why I think there's a chance that we may see another kick back up here to 6,000. The problem with that is maybe even 5,900 to try to liquidate some of those shorts. The problem with that is obviously we have a lot of shorts that are sitting up in here right at 6,000, which is why I said earlier that's where I can see that wick up above 6,000 followed by that strong rejection. And of course we can see if we just look back here in the past that it's not right at 6,000 where there's all kinds of resistance. It's all including up. It's at 6,000 and above, including this entire area. We can see all the way back here, guys, that this is just dancing right up on top. Between approximately 5,800 and the top of this zone would be approximately 6,400, 6,400. So I can see a wick coming up to either of those guys, and then a very, very strong rejection right back down. A wick up, liquidating those shorts. What's going to be your first sign that we're very likely going to get that larger, 25, 30, plus correction? Well, I think your first sign is going to be when you see shorts drastically start to get liquidated here. As soon as that does happen, guys, I think that's going to be a very, very good sign that we're coming down much lower. Also, we're going to be watching longs, monitoring longs somewhat, guys. Now, longs have been basically stagnant here, just for the most part, moving sideways. You see shorts drop, longs start to stack, and you can almost guarantee that we're going to be coming back down for that larger correction. And again, the only reason we haven't seen this before, manipulation, number one. Number two, it's getting more difficult to manipulate because there are not nearly the amount of guppies in the market that we had in 2018. In 2018, we had so many retail, so many guppies, so many non-traders that thought they were experts because they made money on the bull run in 2017 that just got completely crushed in 2018. So for the most part, you've mostly got experienced traders in here. I use that word experienced loosely, but you've got traders that are not foolish. Again, I use that word loosely. You've got a lot of traders that have a lot of experience. They've seen people get liquidated, so you don't have the guppies that you had in 2018, and so it's becoming much more difficult. This is really becoming a chess game. It was checkers. You know, it was just this simple game where it's easy to liquidate the guppies doing. Now we're into more of a checkers game, and that the more this goes, the higher this goes, guys, the more difficult it is, the more strategy that market makers have to use to try to make some money. So I could see them trying to kick this thing up possibly above 6,000, and then a very, very strong rejection if we haven't topped out already. We'll have to wait and see how this ends up playing out. Now, just as a trader, if you're looking at a target, if this thing does break up here to the upside, the target that you're going to be looking for in an ascending broadening wedge would be from the beginning of this area all the way up to this top right here on this third touch. You're going to bring this up. Excuse me, add that to the breakout, which would be somewhere around here, and you can see that would bring us up to approximately 5250, 5280, 5300, let's call it. To the downside, the target would be, excuse me, to the downside, guys, the target is going to be right here at the bottom of this wick, right in here. That's going to bring us down to approximately 4,800. Now that is a very, very loose target. Obviously, looking at this, guys, I think if we did come down to 4,800, we would at least drop down to our 4,500 area of what should be support. We can see it was massive resistance, not massive, but it was a resistance, the first area of resistance back here when price was dropping in November of 2018. That should act as a very small support, if not a decent support to bounce along at least temporarily. But so I would expect. So if you're just looking at this from a ascending broadening wedge target, yeah, it would be targeted somewhere, you'd probably pick a target somewhere around 4,700, but I think more than likely, guys, if this $5,000 to $4,900 support breaks, I think we're at least coming down here to 4,500 in the short term. Other signals we're going to be watching, looking at the daily RSI, guys. I've pointed this out before. This 53.9 is an extremely relevant zone, in my opinion. We could see going all the way back to approximately August of 2018. Price was, or excuse me, not August. Or was it September of 2018? Once price broke down here, that area was acting as strong resistance. Once we finally broke up, we can see that that area has been acting as strong support. Very small, brief breakthrough, guys, but immediately got pushed right back up. If we do end up breaking below this area, guys, if we do end up breaking below 53.9, I think that's going to be your first sign that we're coming down much, much lower. So I would watch for a bounce near that area when we approach that area, but if you're a scalp and or day trader. But again, if you're looking at this more for the long haul, guys, as soon as we do break that area, guys, we may get a little bounce off it temporarily. Kind of, we had this little bounce here. I think we can get a temporary bounce off that, guys, and then I think very likely as soon as it does break that platform, guys, it's not going to be like this. I think it's going to be more of a dump if and when that does happen. Now, of course, I could be wrong, but I think that, again, that's going to be another signal to watch for that larger correction that is to come. Excuse me. Also, we're looking at the Stochastic RSI. I usually don't look at this very much, guys, but on the weekly, it is extremely overbought, guys. The last time it was this overbought was again in 2017, December of 2017. We've been sitting here in overbought area since March the 4th. It is now obviously current April 22nd. So we're looking at this almost a month and a half overbought. The last time it was, oversold. The last time it stayed that oversold before finally correcting was back in November of 2016, and then of course it just dumped. Back then we were, November 28th, and then it dumped December 26th. So we're even past that actually. So we are way overdue. The Stoke on the weekly, guys, is just screaming for a larger correction. Quickly checking our moving averages, exponential moving averages, Bollinger Bands, we can see that we're stretching the upper Bollinger Band here. This is on the daily. Stretching the upper Bollinger Band here again, expecting a correction here. Doesn't mean we haven't. We've seen the Bollinger Band stretch before, so just take that with a grain of salt. Really, the indicator, the EMA that I'm watching closely, as you guys always know if you watch any of my videos, is the 21-day EMA, guys. That is in my opinion, the single best moving average or exponential moving average that you can watch for signaling a trend change. If you're above the 21-day EMA and you get a decisive break below, by decisive I mean a daily candle both opening and closing below the 21-day EMA, that is a good sign that the trend is shifting towards the bears. Now the opposite is also true. If you're below, you get a decisive break above, that's a good sign that the trend is shifting in favor of bulls. So I'm going to be watching very closely this 21-day EMA. Again, not a break below, but a decisive break below. We can see it danced right on top of it here for about a week, wicked below it here a few times, but ended up amounting to nothing. Was a very strong support. If we get a daily candle closing below the 21-day EMA, that's going to be your first sign. If we get a daily candle both opening and closing below the 21-day EMA, watch out below, in my opinion. Now, addressing the golden cross, I did this a couple videos ago. If you guys missed the video, I would encourage you to go look at my prior video In fact, when did I do that? That was I don't have it up here. Sorry, guys. Anyway, I did a prior video. It was called Bitcoin Breakout plus Golden Cross equal Be Careful. I would go back and watch, I think it was about 2-3 videos ago. But I went into some detail on what historically has happened when we've had a Golden Cross. For those of you that are unfamiliar, Golden Cross is when the 200-day, or excuse me, the 50-day moving average crosses above the 200-day moving average. We're talking about simple moving averages now. Once that happens, guys, that's called a Golden Cross. Also, a cross below, if the 50 crosses below the 200-day moving average, that's called a death cross. Obviously, a golden cross is an extremely bullish sign of a trend reversal, and a death cross would be the opposite towards the a bearish reversal. So we did have our golden cross here. That was on April the 23rd. Again, I do believe overall this is an extremely bullish sign. I don't want to discount that, guys. There's no question about it. Historically, this has been a very, very good sign of a bull market, that we're entering into a bull and or bear market. Not and or bear market, depending on what we're looking at. In this case, a bull market. So overall, yes, I'm extremely bullish on Bitcoin. Do I think the bottom is in? I think so. I know some people disagree with that, and that's fine. I obviously could be wrong on that, guys. But this golden cross does not, historically, just completely looking at Bitcoin's history here, anytime we've had a crossing of the 200-day and the 50-day moving average, even though historically that has ushered in a bull or bear market respectively, it was not without a major correction to the other side. So I'm going to go ahead and bring this back. Again, I'm not going to go through it in the amount of detail I did on the video that I talked about prior. Again, go look that up. It's titled Bitcoin Breakout plus Golden Cross. You Be Careful. Watch that again if you're interested. But guys, just going back and looking at this historically, the last time we had this, guys, was the death cross, and that was on April the 30th, 2018. And what happened shortly after? Price was down here when it happened. Of course, a death cross, that would indicate that was solidifying that the bear market was in fact in place, guys. After this, after what everybody was hoping was just a correction from our all-time high of 20,000, this was the first time that everybody, said we may in fact be in a bear market, and of course, history proves that we were. But what happened here, guys? We had this death cross? Everybody was calling for a bear market. Everyone's calling for a continuation to the downside. And did we end up having that? Well, overall, we did. But what happened short term? What happened within a few days of that happening? We actually had a correction back to the upside, to countering that, of 54%, almost 55%. So of course everybody was discounting that. Everyone said, ignore the death cross. We're continuing upside, or we're continuing up. Bitcoin is still bullish. And of course, history, the rest is history. Everyone got wrecked in 2018. The opposite was true. But the golden cross and death cross has a long history of doing that. I use the term long very relatively, because Bitcoin itself does not have a very long history. But the last time this happened, I'm actually going to bring us all the way back to April of 2014. So April 2014, that's the first time we had a major crossing of the 50-day and the 200-day moving average, guys. That was a death cross. We're coming off an extremely bull market here, very similar to actually what we saw in 2017, and very similar to 2018, what we're looking at here. We had this death cross on April the 9th, 2014. Of course, that was, if we historically we look back, and sure enough, that was solidifying the bear market. Bear market did continue, but not before what happened. Not before we had the death cross. Everyone, looked at that as an extremely bearish sign. But what happened in the short term? Within a few days, Bitcoin went up almost 100%. So fast, and we actually had another crossing. Very shortly after that, we had another golden cross, followed by another death cross on September the 14th. So all that to say is, guys, yes, we've had a golden cross, but Bitcoin has a history of doing the opposite of whatever that cross happens to be. So if it's a death cross, it has a history of correcting to the upside before continuing down and confirming that death cross. And if it is a golden cross, which I'm going to show you here in just a minute. Here we have the golden cross here on July the 14th of 2015, indicating that we may in fact be turning into a bull market. And of course, history shows that it absolutely was. But what happened? We had the golden cross, and did Bitcoin just continue up to all-time highs from that point? Absolutely not. We had the golden cross, and Bitcoin actually corrected to the downside, countering that 37.3%. So again, just the opposite of what that cross was showing. In this case, a golden cross. So if this does happen, or excuse me, if history is any guide, now that we've had that golden cross, guys, if history is any guide at all, we should get a fairly good correction, at least 25, 35%. And if that doesn't happen, it'll be the first time in Bitcoin's admittedly short history that we haven't had that large of a correction. So let's assume that if this is the top now, and the least amount that we've seen from that golden cross, in other words, the least amount that it's countered the trend is about 35%, 37 exactly, to be precise. And so assuming this is the top, to correct about 37%, that would bring us down to about 3,600. And 3,600, guys, as we've pointed out here in the past, 3,600, if I just zoom in here, we know is a very strong support. Not a very strong, but a decent support here. We've got this marked out here at about 3,550, and we can certainly see 3,600 acting as a decent support. Can it go lower than that? Absolutely. But again, that is an area that I would expect. I'd expect a bounce off that 4,000 to 4,120 without question. I would expect a small bounce off of 3,800, and I would expect a decent bounce off 36 to 3,550. Again, if we're going to be coming down that low. Not saying we're going to, guys. I'm just saying, again, talking to day and or swing traders right now, these are the areas that you want to grab your quick scalps, and again, you'd want to get in and you'd want to get out. If we go sub 4,000, guys, anything is on the table. If we go sub 4,000, I think certainly there's a good shot we're to come back down, at least double bottom here at 3,150, if not coming much lower than that. Sub 4,000, sub 4,000 will completely invalidate this this bullish momentum that we've had so far, and again, anything will be off the table. If 4,000 does hold, that would be extremely bullish, guys. If 4,000 does hold, that would just validate this entire momentum. And I think, personally, in my opinion, guys, I think that 4,000 will hold. I'm not even sure we're going to get down that low, but if and when we do, I think 4,000 will hold. I think that's going to be the lowest it goes, and I think we continue off from there. Could I be wrong? Absolutely. Absolutely, I could be wrong, guys. Nothing surprises me with crypto, and of course, I'm going to be playing my, I'm going to be holding my portfolio accordingly. I'm not going to go all in at all. I'm not going to be, I never am going to go all in, guys, but I'm certainly going to have fiat on the side to play these quick scalps and or swing trades all the way down if and when that does happen. Now, if 4,000 does break down, and again, I'm not calling for this, guys. I know some people are. I'm not on. I don't think that. I personally, I don't think it's going to go sub 4,000, but it's definitely on the table, and I will definitely have fiat on the side if it does. How low can it go if we do go sub 4,000? Well, the first obvious target is going to be a double bottom here at approximately 3,150, at least on Coinbase and Bitstamp. It's approximately 3,150. Of course, we'd be looking for a double bottom there. That breaks down, guys, and then we have a very decent area of support here between 3,000 and 2,500, as is evident by looking at the chart back here starting on May 29, 2017. We can see that it was a very strong resistance here, came back down, acted as resistance once again, double test here again at 2,500 before finally breaking out. And just to validate that area, what was resistance, it started acting as support here on the week of September the 11th, 2017. Very strong bounce off that zone. So again, validating this very relevant zone between an obvious psychological support at 3,000 all the way down to and including 2,500. Now, if that does break down, we do have a couple areas down here we could bounce off. I mean, I can of course see it wicking below 2,500. And again, we're talking worst case scenario, guys. I do not count this as a probability, even though some people do, but I need to make you aware of it just in case this does happen. If 25,000 does break down, guys, by more than a wick, if we get a weekly candle closing below 25,000, or even a daily candle closing below 25,000, then things get very interesting, and things could fall like dominoes very quick. That's why I've got between 25,000, the next major, or 2,500, excuse me, between 2,500, the next major support isn't until we get down here to between 11 and 1,200. How do we know that? We're looking at long scale now, sorry. How do we know that, guys? Well, we can see going all the way back to November of 2013, this was the area that acted as very strong resistance. Of course, fast forward 2013 all the way up to December 2016. This was the, again, area of very strong resistance, and it took from December of 2016 all the way until February of 2017 to finally break through that zone. And even when we did, we got a fairly strong rejection again, and then boom, finally broke back up. So really it took until April of 2017 to break through that zone. Why do I point that out? I point that out because this was clearly an area of very strong resistance. What was resistance turned into support. In fact, we bounced off that support, guys, and took us up to all-time highs of our $20,000 range, up to $20,000. So this is, if we do break sub 2,500, guys, and I know no one's talking about this right now, guys, and I don't mean to spread FRED, any FUD. Please do not misunderstand me. I do not think this is a possibility, or excuse me, I do not think this is a probability. This is only a possibility. And if we do break this, I want you guys to be informed. I want you guys to know what to look for. This area down here, I've told you guys in videos in months past that this is the area I would go in very, very heavy on Bitcoin, between 11 and 1200, guys. Very comfortable going in heavy. And by heavy, I mean 90-95% of the money I have allocated to buy Bitcoin will go in here if we ever do see an $11 and $1,200 Bitcoin. This would be a very strong support, in my opinion, and this would be an absolute bottom for Bitcoin. Again, if we ever do go sub 2,500, again, just in my opinion. So want to keep you guys aware, guys. I want you guys to know, when everybody else is panicking, when there's blood in the streets, you want to make sure you have a plan for all scenarios. That is the scenario if we do go sub 2,500, in my opinion. Now, up to the upside, what will invalidate a larger breakdown here? That larger 25, 30, even 40% breakdown that I've been talking about. What will invalidate that? If and when we can break up above, say, at least 6,000 and start consolidating on top of 6,000, guys. Really what we need to break is all this noise right here between 6,000, not even that high, between 6,000 and approximately 6,500. If we break above this zone here, this major area of resistance right here, that in my opinion is going to take a lot to get through. If and when we do break through that, guys, that will completely invalidate that, and I'll stop looking for a larger pullback. But in the meantime, guys, again, just to sum up my entire video, I do think we can possibly come up wick above 6,000, and then I'm looking for that larger 25, 30, even plus correction, possibly down here to that $4,000 range. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe, take care of yourselves. This is Working, signing out.